Welcome to The Real Recipe, the podcast that brings you the perfect blend of real estate trends and topics, where we serve up fresh insights and sizzling strategies. So let's get cooking.
All right, everybody, welcome back to The Real Recipe. Ryan's upset because he didn't get to do the intro today.
No, I'm not.
I'm just kidding. But today we have John back with us. Very exciting.
Our podcaster emeritus.
Our original podcast launcher with me and Ryan. And we have Jacob Ansel with us today, who we have recently started working with a little bit more this year. And Jake is a CPA. We're going to be talking about the top mistakes that some real estate investors make. So Jake's got some great info for us. We have a lot of really good questions and some specific scenarios. So
We have to keep it spicy, though.
Yes. Well, it's
Why?
Is
tax
this
boring?
No.
Taxes.
This can get a little,
I don't think so.
people are serious about getting their taxes paid, Ryan. I don't know why you think that.
Well, I think people
I
are
love
serious
paying my
about not
taxes.
paying their taxes.
That's more like
and that's what they want to hear from Jake. How can I avoid paying taxes?
Exactly.
Right. I like a good tax, individual who can help me navigate the world of
Not paying taxes.
paying as much taxes as I need to pay.
That's
How's
right.
that? In
Sounds right.
the best way possible.
In the most legal way possible.
Oh, that's obvious, right?
I was making
I
sure.
do not want to mess with Uncle Sam in any way, especially now with, all this extra funding and all these extra.
Audits going
Yeah.
on.
Oh my God.
I don't want to get audited.
Please.
There's nothing to audit me. That's fine.
Yeah, I know. We're right. We're not.
They're not looking at
John's
me.
like, whatever, just take what I got. Like, it's
Right.
I
Exactly.
think if I
The
review
money-
your tax return, I'll find something to
I'm
audit.
sure you would, yeah.
Right.
The
right,
money
right.
sitting in my Venmo account is just for fantasy football.
Oh,
Like-
okay.
Yeah.
Right.
There you go, red flag. Yeah.
There's
Yeah.
no rules.
Well, they're 1099 now anyway, so
Yeah.
right. It's like $500 or
Actually,
something.
they're delaying it for
Are
a
they
year.
really?
They thought.
Oh, see?
the
Look at
cost
that.
of compliance was too much.
Good news. Good
Yeah.
news right
Good,
there.
good news. There you go.
Boom.
Your takeaway right
So
now.
I'm safe.
You're good on Venmo
Good.
for a little while.
Next year, I'll need to figure out what we're going to do with the fantasy football funds.
Right. Well, you got to win.
Yeah, but I'm the commissioner, so the money just sits there in
Oh.
Venmo.
All right.
Venmo,
I let
escrow.
Venmo just invest it for me.
Good for you.
And I
Good
don't
for
see
you.
a return on it.
Well,
But
listen,
anyway.
having you here, because all of us run into this topic of accounting and LLCs and businesses and expenses and how it all relates to real estate. I get it all the time. I know you do.
And they expect me to have the answer as the attorney, and I'm like, well, no. Like, I'm going to worry about your the legal work, and you need to speak to the accountant.
Yeah.
Isn't it amazing how many people do not have accountants out there that can help them with these simple questions?
No.
Well, I think they could go to Walmart or the
Chat
Jackson
GPT.
Hewitt guy,
Yeah,
right?
Jackson
And that's
GPT.
going to be the guy that's going to take care of me.
Well, I do my own
I
taxes.
can Google the answer right now.
Yeah.
I'm going to tell you exactly what you should do.
Yeah.
Right,
I
or
should claim.
TurboTax. How many people use TurboTax?
Oh my-
Right?
I mean, look.
Listen, you want to hear the craziest story this year? I got a new client. His income was over $8 million on a W-2. He did his own tax return on TurboTax. $8
Okay.
million. He didn't want to pay his CPA. I said to him, what happened? He got audited, right? And he came to me. He's like, can you help me with the audit? I look at his return. And I said, it's all wrong. Every single thing that you did was wrong. He's like, but that's TurboTax.
But TurboTax told me to do it that
Right.
way.
Exactly.
Right.
They
So
prompted me to do it.
Now I'm representing him in front of the state and trying to figure out a way out of this. But there is no way out of it. TurboTax is not meant for a complicated
Right.
return.
Right.
And I can tell you specifically with real estate how many clients I have that I'll take them out on as new clients and I'm reviewing their Schedule E,
Yeah.
right?
Mhm.
Yeah.
For rental properties, and there's no depreciation for any of the last 10 years. You know what a mistake that is? Right? If you have an investment property and there's no depreciation shown, it's use it or lose it.
Mhm.
So
Yeah.
you've missed out on all
So
those
you can't go
deductions.
back and just amend and.
You can, like the last 3
Okay.
years.
But not the
Right, but
last
that's
10
it.
years.
Yeah.
People
And
miss that.
That's like
Yeah.
a ghost write-off too, because you're not really spending that money to
Correct.
write it off. So I feel like a lot of people completely miss that.
They do.
Yeah.
Yeah.
And then when you go and sell a property, you've lost it, right?
Right.
You
Yeah.
have no built up losses and it creates a big
It
tax
doesn't inc-
situation.
Wow.
you just,
Yeah.
I guess it doesn't increase your gain.
It actually does.
Does it? I thought if you depreciate, your gain will now increase over time.
Correct.
But if you
So-
don't depreciate the rent,
but you don't have a choice.
Mhm.
You should have taken depreciation, but you didn't.
also regardless, my gain is going to
It's
increase.
But if you
whether I
had these
depreciate or
losses
not and
from
take the actual,
depreciation,
no, I understand.
right?
So take the depreciation,
Well, listen,
or understand that your accountant should be depreciating your rents every year.
Right,
Well,
and try not to use like freeonlinefile.com or something for your returns.
Right.
Well, I get. Listen, I think the first takeaway here for anybody is if you have any type of real estate, you should be speaking to a qualified accountant to manage your tax returns. Right, doing it on TurboTax or doing it on your own or going to Walmart.
Plus, it's a business expense too.
Right.
There
Like,
you go.
why would you go and do that? Regardless, but there's all these little nuanced pieces to it that every little bit counts. Right? And,
Sure.
And if it's an expense and you can write it off, why not? I mean, why would you not write it off? And it's for that's not a very complicated tax return anyway. So what is it? A couple $100 to get to save on taxes? Why would you not make the investment and spend? And then you get some veil of protection having it done by a qualified accountant versus, because they're going to look, if you get audited, it's going to look differently if an accountant's done it.
Absolutely.
Versus
Sure.
There's actually statistics on that showing people who prepare their own returns, self-prepared, TurboTax, free online file, they get audited more.
And I'm
because
sure
they're not
the IRS
sophisticated.
knows too, like even, okay, this guy's a shadier accountant, right? Because they've seen that. This guy tends to push the envelope versus others too, which I'm sure they track.
The 1 year I used TurboTax. The 1 year. I only did it 1 year because I got audited.
Did you really?
And I missed the 1099 that I whether I got it, I didn't get it, whatever happened to it, from a firm that I was 1099 with, and I was just right out of law school, so I wasn't even an attorney yet. And then I ended up owing like another $5,000. I'm like,
but it's so interesting you say that because I used years ago, it's before like I even made like any money at all anyway.
Right, I wasn't making a lot of money, so I
used someone from H&R Block who was a client of, where I worked at the time, and I got audited. I owed like another $500 or something because they missed something on an investment account I had, which is like probably making me
just pay it, move on.
It's like, but it's so ridiculous. I'm like, how could you completely miss that again? But I don't know the tax code, so I defer to a professional to be able to tell me those things. And it's like the one time I didn't use I feel like a really qualified CPA. Yeah. And that's what happens. And I'm like, had no money for the government to even take anyway.
Now throughout the year, I'm reaching out to my accountant for things, texting them, calling them just for questions, whatever it might be.
Right, as you should.
Like, what kind of questions come up?
Well, let's talk about,
for instance,
let's dig into some of the conversations
like with stuff regarding the flip, right? So we're
So we just finished a flip up. Well, what was it? September. We bought it in March, April. So we had it for 5 months.
So just from like foundation, do we buy it in an LLC?
It's a great question.
Now, from legal perspective, I'm going to say, hey, Rye, like, yes, we're going to put it in an LLC for liability reasons.
Now, this is your first flip?
First flip.
Okay.
So I text the accountant and say, hey, it's before I met you, by the way. Hey, so everyone out there knows. But hey, I'm getting into a flip. Put it in the name of the LLC. This is the setup. And he's like, why'd you just make this so complicated? Because we have an LLC that owns the property, but the members of the LLC are LLCs because we have, partnership.
Sure.
Or membership interest. And so that was when I spoke to you earlier. It was like, well, did I make it more complicated? And what's the difference if I bought it individually from a tax perspective or individually between us and in an LLC?
It's a great question. It comes up all the time. I get this at least 4 or 5 times a year. And the right answer is, if you have a multi-member LLC, it's considered a pass-through entity. And a pass-through entity will give you each K-1s.
Yeah.
Right? Mm-hmm. Those are the least audited types of entities out there. So when you're doing a transaction, if you have items that you want to deduct against the potential gain, right, you want to make sure you take advantage for all the tax code write-offs. And if you have an LLC and it's a pass-through, it's less audited than putting it on your, on your personal return. It makes a lot of sense to do that, right?
Doing it on a Schedule C.
Doing it on the partnership tax return, right?
No. I'm just saying. But if you were to just do it in your name individually, you're going to do it on Schedule C and then write it off that way.
Well, that depends. It's a good question.
Okay.
Schedule C would be ordinary income. Is if you're in the business of being a flipper, right? You buy and sell continuously.
But what if you're not?
But right now we're not, right?
You're not. It's the first one, right?
Yeah.
So that would go on the Schedule D, which is a capital gain.
Yeah.
Okay. So what would the difference be between those two? Right. One's ordinary income.
Yeah.
And the other one is a capital gain. Right.
Yep.
There's a huge tax impact whether you go one way or the next. So if it was on your personal return and you did not do it through a partnership, if you had it as a capital gain, and let's say potentially you have built up capital losses that you couldn't deduct, right? Or you're sitting with a portfolio, and today the market's doing amazing,
Yes.
right? So if I was sitting out there with $100,000 capital gain, first thing I do is call my broker. Hey, what do we have in my portfolio that we can sell today?
Take a loss on it.
Take a loss,
sure.
right?
Oh, yeah.
Maybe
Yeah,
we'll
yeah.
rebuy it after some time.
Yep.
And you would minimize the impact.
Got it.
Now, if you become a flipper and you keep it on a Schedule C, like you said, it's ordinary income. And on a Schedule C, it's subject to an additional tax called the self-employment tax.
Oh yeah, right.
Right?
Yep. Okay.
If you had it through a partnership, right, and or an S corp would be potentially better. There would be no self-employment tax on the S corp. There would be on the partnership. But what happens is if you become this professional flipper, you could take advantage of the tax code by taking salary, right, management,
Sure.
and you would get a 20% reduction in your income from what's called the QBI, qualified business income. There's a huge impact. Knowing the law in advance of what you're doing can save you a lot of money. So
see, like these are those little. See, this is what. Okay, this is why you have to pay for somebody. Truthfully, like
yes, no, true,
there's
absolutely
if
true.
If you're doing anything in real estate and you're not using an accountant, you're losing money.
Well, not just any accountant, an accountant who understands what you're
listen,
doing.
I love Jake, obviously, right?
Yeah.
But just using
But
having
I'm
somebody
just
who's
saying.
competent in the tax code to be able to guide you through that and just make those silly little nuanced changes.
They have a huge impact.
Right.
Yeah.
I mean,
Without a doubt.
save thousands and thousands of dollars.
So, any main difference between purchasing in an LLC and purchasing in an S corp, as opposed to a partnership?
Same thing.
Same thing, right?
It's just a legal entity.
No. That I understand. I just wanted because
however,
he was saying partnership and S corp.
For tax purposes.
I just want to make
right?
sure.
Right.
There's
So
no real
that would
difference
that would
between them.
depend on if you are going to be considered a professional flipper, right?
Right.
Or are you going to buy and sell once or twice a year, and it's
So
more
if
of
I
a
do,
hobby
so let's
thing.
say if it's more of a hobby thing, I do one or two, then we can go with
I would keep it in.
gain.
Right. I would
right,
keep
as
it in a
opposed to-
partnership.
Yeah, right.
Right.
You'd keep it in a partnership.
I would, because it's not considered ordinary income. It's a capital gain.
What about just separate LLCs every time you purchase?
That would be more of a legal thing, right? From taxation, it's the same idea.
Okay.
But you're
Okay.
but not to get off into the legal aspect of it, but you're always going to. There would be no reason for you to buy something and not put it in
Right.
an LLC.
Yeah, no, that's what I'm
Right.
saying.
Just to give you that valid.
I just want to make the
protection.
distinction
You-
between partnership.
You're right, though, because if you're going to do it on your own and you put it into an LLC, you can always decide whether or not you want it to be a multi-member or a single member. And
Right.
if it's a single member, it's
Yeah.
the same as putting it on your return.
Right.
It's
Right.
disregarded anyway.
Right.
But the LLC route is so important. True story. About 10 years ago, with a couple of my friends, we decided to buy these they were lots at the time in Philadelphia,
Mhm.
right? And our idea was that we were going to build these magnificent homes, right, in this great area of the city. I think we paid, I don't know, it was like $500,000 for the 3 lots.
Yeah.
We were going to put another 500 in. So we'd be in for about $1 million, and we were going to sell each one of them for, I think they were going at the time for $400,000 or $500,000.
Right.
Okay.
Home run.
Great idea.
Yeah.
We execute. We put it into an LLC, and we sell them. We make the money. We're all happy. Now, this was a single-purpose LLC. We bought it for one specific reason.
Yep.
So now the project comes to an end. We collect all of our money. So what would you do with that LLC? You may get this question a lot. Do we
Well, we
dissolve
have that going
it?
on right now.
Right.
We're
Yeah.
dissolving it.
You would dissolve it?
Well, right now, let's say for our flip, we have an LLC. We're going to
It's
file
done.
taxes.
Yeah, it's done. We're not
I
doing
got
it
an
again.
email
Yeah.
to register it. Do I register it or do I dissolve it?
I'm sure you get that question all the time. I know people ask me that all the time, and I can't
Sure.
give legal advice.
Yeah.
From a tax perspective, you file a final partnership tax return, and you're done.
Right.
On the legal side, which is your end of this, sorry, this is not official advice.
That's
What
right.
I-
We preface this
disclaimer.
entire
Disclaimer.
thing.
She
with
never
that.
even, like a scrolling
Don't sue me.
disclaimer.
Right-
across
right
the
under
bottom.
right under
Yeah,
Jake's
yeah,
face. It's just
yeah.
gonna be like,
I
am
always
not an
say,
attorney, no legal
Call
advice.
your attorney and double check. But here's the
Go
answer.
ahead, go for it.
Leave it open. Don't dissolve it. By statute, most LLCs will dissolve after 3 years.
Right.
Mhm.
What's the statute of limitation for a lawsuit? Usually 3 years.
Right.
So what happens in this LLC? And I took my own advice and we left it open.
Oh, yep.
Almost on the last day before the 3rd year, we get a lawsuit in the mail, slip and fall,
Oh,
Really?
man.
because the LLC
From the date of your ownership?
yes,
Oh wow.
Okay.
right. So we let the LLC lapse, right? We didn't dissolve it, but by
Right, but you let
statute
it
it has
go.
3 years,
Mm-hmm.
right? But there are people out there, unfortunately, who will track these things. Okay, So
Sure.
we got a lawsuit in the mail.
That's crazy.
What assets do we have left in the partnership?
No,
Okay.
yeah.
Well, in the
Nothing.
LLC, nothing, right?
Nothing.
Right? It was a single purpose.
But if you would have dissolved it,
then the
Individually?
corporate veil would have been pierced, and they
Right.
would have gone after each of the owners.
all right, so we'll keep it open.
Wow.
Keep it open.
We'll keep it open and just file the final partnership.
No
Fu-
one probably ever thinks to ask that question. That's
Wow,
amazing.
that is-
Actually, I've never gotten that question.
Amazing.
As the real estate attorney, I've never gotten
I
that
do,
question.
because-
Like, should I dissolve this? We a day or two
That's
ago.
it, Jake. You're good.
Yeah.
That's it. Done.
Hired.
After
Yeah.
after that's
That's great.
that's worth its weight in gold right there.
Yeah, we were just talking about this because I said, "Oh, I just got the email to register."
Right.
So
I mean,
I was going to register it, and he's like, "Well, we should probably just dissolve it because we're not going to use it
Right. but
ever
it-
again because it's very specific to that property."
Correct. Let it sit there. You
Right.
may get notices from time to time, for the state of New Jersey or New York.
Yeah,
You
we
have to
just-
pay
we
your
just got
annual
the sta- we
fee.
just got
you
the
get
sta-
penalty because you didn't pay the whatever $500
Right.
or whatever it is.
But as long as you file a final tax return, then your obligations are done.
Okay. So funny. I had
So
someone who
wait,
just
so,
dissolved
so
theirs
we
too.
don't,
and
so we
it's-
don't need to. So
hasn't
if we
been produced.
file the final tax return for the LLC, we can leave it open and not even worry about re-registering it every year. Just let
Right.
it lapse.
And if you look at the state's website, it'll show the status. And after about 3 years,
Right,
it'll,
there won't be a cert of good standing ever because we won't
Correct.
be in good standing, but we would
Who
never
cares?
be using it.
it'll
Yeah,
show
right
status
there. Yeah.
revoked or,
Right.
And if
or
we ever
dissolved.
wanted to
right.
use it, we would just pay the fines.
Fine and move on.
Potentially.
But most
Makes
people
sense.
will just open up an LLC as 123 Main Street for that property, 234 Main Street for that property. Now let's say I buy and hold, okay, and I have 123 Main Street, 234 Main Street, right, blah blah blah, and I have four different properties all in separate LLCs.
Mhm.
Do I form a holding company, a parent company, to hold all of those entities and those assets
Great question.
from a tax perspective?
So about 2 years ago, I got a client and they had exactly that situation. They had all of these LLCs opened. Some of the properties were in LLCs. Some of the properties were in their own name. Some they put mixed up with their business.
Mhm.
You and I know a guy right now that has
Oh,
this
man.
has this
Yes.
problem going on.
Yes, you
so
do.
yeah.
I have it saved probably through today on one of those big whiteboards in my office, what I did for this guy.
Okay.
Okay. So the first thing I did
He didn't
was,
erase it.
oh, I didn't because it's
Still
like
left it.
the
Taking-
perfect
taking
example.
selfies
Like
with
the-
it. Yeah.
The dry erase pens are like just like slowly fading away just from like
You
the
could
dust
see where there's
particles.
little
Oh, and
Yeah, little
I
white
want to
marks.
erase it, but I won't.
You know,
Yeah.
So I drew out for him on this board, right, all these little circles. And each one of these circles represented a property
Yeah.
that
yeah.
had an LLC, right, in each one of them. Now, each one of these properties we found out were owned by him and a partner, and sometimes this client and his wife or his cousin. So what I did was I said, all of these sub LLCs we're now going to form a parent company.
Right.
And we called it SAM LLC.
Right.
Right?
Yeah.
SAM LLC now was able to take the ownership of each one of these LLCs as a flow up.
Right. They're disregarded.
These were all disregarded
Right,
entities,
right,
right. Right.
Everything, all his ownership units,
they
went
get
up
pushed
to
up
him.
to Sam LLC.
Yeah.
right? But in the ones that were with his cousin, let's say, we filed a tax return for this, but his ownership was still in Sam.
Mhm.
That was the one
Okay.
where they were
Yeah. His
individually
portion.
owning
His,
it.
Right.
Yeah. His portion of the ownership.
Would get
Correct.
pushed up.
Correct.
Right.
So from a tax perspective, but from a liability perspective, not great.
Right. That's
Well-
why I put mine.
But
'Cause
it
I have that
actually
structure
it
set
is
up
good,
for me.
though, because he
Yeah.
now has 2 layers before it gets to him.
Correct.
Individually.
Right. That's what. Because when I
Yeah.
set up the LLC for our flip, I had it flow up into my holding company, which then
Correct.
Comes
So
into me.
on his own individual return, he owns 10 properties, but he's getting 1 K1. Right. So it makes it simple for him.
Yeah.
In addition,
Yeah.
we then opened up an S Corp right next to it called Sam Management.
All
All right.
See, there
Now,
you go. Yeah.
What was the purpose of that?
To have additional.
To extract additional income out of the businesses and offset against expenses,
Correct. And we also put his wife and his
salary and
correct, his old
retirement.
child, 401k, right? He has a couple of kids that are 17 through 21. They're all helping him, right? And he's growing this empire. He plans to buy another 10, 20, properties. So now he's moving the income up to Sam. Then he puts it into Sam Management, flows down salaries to his kids, right?
Yep.
You can do up to $12,000 a year and not have to file for each child. But he did one better. He took that $12,000 and we opened up a 401k plan.
Right.
For his
Roth IRA. Yeah,
exactly.
Roth IRA. Yep.
Still no tax to pay for him, right? So for the 3 kids, we got the $12,000 each.
That's $36K. He's not paying that.
That's good math. I was just thinking about
Well,
that. What is 12
Why do you
times
think
3?
he got a law degree?
I went to law
Wait,
school.
let's flip.
Okay.
Okay. You ask me all the legal questions. I'll ask you all the tax questions. I
think
cannot add.
I don't add either. I can't add.
But
He
I
just,
didn't realize
he just
I-
did that on ChatGPT so quick.
I asked ChatGPT,
12, right,
what's 12,
right,
what's
right.
12
Yeah.
times 3?
and it gave you the right answer.
It did.
And put some zeros
about
after
that?
it.
You always need to double check
Yeah.
ChatGPT. No, but what I was about to say was, so that's $36K he's not paying tax on.
That's right. And he's building wealth for his children in a Roth.
Right.
Roth 401k.
It's amazing.
Grows forever, tax free.
Right. Tax free. Yep. That's amazing.
So that setup is also unbelievable. And by moving money not only from the individual sub LLCs up to the management company, right? 'Cause he's managing them. He also moved money from his real estate holding company to his management company to lower the income and take advantage of what the QBI is, 20% reduction because there's wages in there.
Right. Yeah.
Very powerful move.
Yeah.
Absolutely.
Oh yeah.
And what we later discovered, even more interesting, this is more on your end, that even though the properties were in the LLC, guess what wasn't titled correctly?
No.
The properties were
None
actually
of the properties. He probably.
they were actually in his own name. So we had to go out.
Wait. Go back.
He opened up an LLC.
Uh-huh.
No mortgages.
But the deed never had the LLC on there.
Correct.
Mm-mm.
They were all in his own name.
Who did that?
Well, and it's the
Because he
thing.
bought them all for
Well,
cash.
if he bought them all cash, the
Bought them
title
all
and
cash.
never
Right.
told the title company, "Hey, I want this to be in Sam One LLC."
Right.
How would the
So
title
he
company
don't-
know?
Right.
We need
Oh, but
that.
And maybe he didn't have an attorney. Where was he buying these properties?
Is
Jersey?
this the same guy?
Oh,
that
yeah,
did
they were all New
Did
Jersey.
this guy
But-
do this
but
on
again, if he-
TurboTax?
No. No, but if he's buying,
that
No,
seems like a TurboTax thing.
But let's
But
just
his
say,
accountant never said to him, "Hey, let me get a copy."
yeah, but what
of
about his
all
real
the
estate?
purchase-
But what about his real estate attorney? His real estate attorney would have said, or
Well,
I'm
you
sure there would have
you
been a discussion
think.
saying,
Yeah.
"Hey,
No, it's
you know,
good-
so
good
so
point.
my you know,
But
Ryan
they should match.
Well, so Ryan's
should,
Ryan's
yeah.
my client. He comes to me. We're buying 10 properties this year. Perfect. They're all investment properties. Great. You're the only member of the. You're the only person buying. Yeah. Okay. We're gonna put all these properties into an LLC individually. Each individual
Yeah.
LLC will own the property. That's the conversation I would have with my investor.
Right.
And then when I get the deed from the seller, you know, the buyer on the contract is going to be the LLC.
Right.
Right. Or Ryan Merritt, entity to be formed at a later date, whatever it is. Right. TBD. But when I get the deed as the attorney, I'm going to make
Say
sure.
that 10 times fast. TBD.
TBD. CBD.
Well, that seems
so-
like, just
so I'm
seems
gonna
like
double
a
check.
colossal fail.
He's just
how-
so used
how
to
you-
saying GPT, like somebody says.
Yeah, right.
See, but you're going to say this to your client, but I mean, that scenario happens more often than you think because I mean, I know people personally who have had several properties or they have different partners and they're not deeded out. They're deeded out incorrectly just like that. And then they have to redo everything all at once.
But
Correct.
here's
It's a
here's a
mess.
question for you. Okay, so it's individually, and now you're going to put it into an LLC. That's a sale. Technically, that's
Well,
a
it's
sale.
a conveyance
so that,
for sure. Yeah.
That
It is.
changes the dynamics of the property from a cap gain standpoint, from
Well, stay on that on the cap gain. So if
everything.
I
mean, there's so many. See, this is why this.
So
we
if-
could sit here for like 5 hours.
no. So
Like,
okay.
this- all of a sudden you just go.
So wait. So your client bought those properties individually. They were deeded to him individually. Consideration on each of those properties. Let's just say $500,000 a piece.
Mm-hmm.
Now he deeds that property, quit claims it for $1.
Into
Right,
an
to the
that's
LLC.
what you would
LLC.
do.
That's
How
exactly
does
what
that?
he did.
Okay, but how does that impact capital gains now?
So
And I go to
he-
sell it for $1 million next year.
It's not considered a capital transaction. It's really a correction of an error
Right.
And it's the same beneficial owners.
Right.
Right.
So in his case, there was no tax consequence.
Because the LLC was formed at the time that he purchased.
Correct. And it was his intention for
To
it
do
be
that.
in the
To always
LLC.
do that.
But let's say if he
buys it individually and then 2 years later goes, you know what, I should put it in an LLC, creates the LLC and then does it, does that now change that dynamic? Because now
the answer is no.
Okay.
There would be no capital gain or loss
issue.
impact.
Okay.
The issue would be more of a transfer tax in whatever state, locality
Right.
it was in. Right.
okay.
He or she may have to pay a transfer tax
If there's
upon that.
an open mortgage
But
on
there
it.
has to be a reason though to transfer it to an LLC. It
Mhm.
sounds great. Every attorney loves to say, "Oh yeah, put it in an LLC." Well, from a tax perspective, it may not make a difference if you have a single rental property that you own.
Okay.
Right? People will say to do that because of liability protection.
Right. That's why we do that.
Right.
Right.
So,
But-
okay. So I guess the takeaway here is if you have it in your name individually and you're going to put it in an LLC, it's not really a taxable event. If you're doing it for the right reasons.
Correct.
If you're just, I mean, but it could turn out to be, if you ever got audited, the IRS could come to you and tell you
They
that.
could say it was a
But that's highly unlikely.
highly unlikely, and when it's the same ownership,
Yeah.
right? If I own it today and then I move it into an LLC that I own,
That's just yeah. It should.
it's really a transfer.
This is
Right.
real quick similar to like a lot of the questions we've been discussing the last like 2 weeks
Yes. So many of
where
them.
we have clients who are like, I own the property outright.
Yep.
And I want to transfer it, from my trust that has expired
Mhm.
into an LLC.
That's a
What-
completely
what-
different story.
Now, from a tax perspective,
Right.
that's on him to speak to the accountant about.
Right.
He's coming to me and he's saying, what other implications are there? And usually it's, well, maybe your owner's policy becomes void because he's keeping it, the two trustees, beneficiaries are remaining the same, and they'll be the same
On the LLC.
members on the LLC.
But he's
Mhm.
pulling an asset out of a trust.
He's pulling an
Right.
asset out of a
Right.
trust.
That's a huge.
That's
He's
So
paying
from a
tax
tax
implication.
perspective,
Right.
So he's pulling an LLC out of a trust that
An asset
apparently
out of
is
a trust.
sorry. He's pulling an asset out of a trust that apparently the trust has expired, and he wants to now put it into an LLC.
Right. So he's distributing his property, right,
Yeah.
as a taxable event.
Right.
But
Right,
why
that's
do that?
crazy.
Why not
Yeah.
keep it inside the trust? When you say the trust expires.
So
Yeah, what would
it's
be
a
the
great
benefit
question.
of coming out of the trust
I'm
into
waiting
the
to
LLC?
have that.
I don't, that's,
So most
I'm with
trusts are written that if there's a certain time frame that, for example, when an individual turns 25 and then 30 and
it terminates.
35,
And
it will.
Yeah,
Exactly.
Right.
So
And I think
that
that's where
would-
he's at right now. Is the,
Okay,
the,
right,
the
right,
kids
gotcha.
are 30s and 40s.
But to his point, that's a taxable event. That's
Right.
it.
So I said to him, I
So
said,
you're not changing
but that's
that.
why I always say, regarding tax implications, you need to speak to your accountant about how this transfer is going to affect you from a tax perspective.
Mhm.
If you just want to transfer it into an LLC, just transfer it into an LLC because you think that your trust is expired, you might want to just consult with your trust and estate attorney to redo the trust.
Right.
Right.
Or
That's
Or
change the terms of
or
the trust.
Talk to a really good accountant.
Well, no. Yeah,
to
you're
help
gonna.
you.
Well, you're going to
figure
speak to
this
your
out.
accountant, and your accountant's going to say, "Why the hell are you doing this?
Right,
There's
yeah,
no
yeah,
need to put it
yeah.
into an LLC."
Well, the truth is though that they could put it into an LLC owned by the trust. That happens often.
Right.
Okay.
So the
Right.
trust now becomes the sole member of the LLC.
Exactly. It's disregarded.
Mhm.
There's so many things we could speak about in
No, I
regards to
know.
taxation.
Right.
I have
and
one. I have a
real
different
estate.
scenario too, kind of on this same vein, but it's a topic that we've all talked about recently.
Okay.
Subject to.
I'm doing a lot of subject to conversations
Right.
because the market's in a terrible spot and people are trying to get creative.
Right. So subject
Mhm.
to. Is you familiar with this in real estate?
Yes.
So my question is, how does that relate from a tax standpoint? Because you're buying a property subject to somebody else's mortgage,
Mhm.
but it's not your mortgage. So you're
But
technically
you're
buying
making
a,
the payments.
right. You're buying a $300,000 asset, subject to somebody else's mortgage.
Mhm.
You're not coming up with any money. You're not borrowing any money. So technically, you're paying $300,000 for that property
Correct.
because it's not your mortgage.
And you're assuming their mortgage.
You're not assuming it.
You're not
You're
assuming
not
it.
assuming it.
It's
Okay.
just subject to. So
their
the,
mortgage.
so the mortgage.
Right.
So I'm buying from you. The mortgage stays in your name.
Uh-huh.
Everything gets transferred. I get title. I get title insurance.
Everything, yeah.
Now I'm just making your payments. And maybe I take a small loan from you as the seller for
Mhm.
seller financing purposes. Maybe not. But that's the loan stays in your name, but I'm making the mortgage payments as the new owner.
So technically, it's a sale of the property.
Oh, it's a sale.
Right,
No,
yeah,
it's a
sale.
It's a sale. The only difference is that the mortgage isn't getting paid off.
Right.
So
why would a bank allow somebody to do that?
Well, the bank doesn't know that that's happening.
The
bank doesn't know.
They don't
about
know
it.
about it. That's the
what's
problem.
happening.
No one's going
And
to.
I'm thinking in my
That's
head,
like moving a property into an LLC when you have
Correct.
a mortgage without getting bank permission 1st.
Absolutely.
Right.
It's actually
You're not
probably
allowed to
worse.
do that.
That's
Maybe worse. You're
These
right.
are what our nightmares are made of.
These are the
Types of
constant-
transactions, because I mean, bringing it back, it all comes down to the same conversation: is you have people who are buying real estate or moving things into different assets, and they're not talking to,
Qualified
a
individuals,
qualified
yeah.
individual like their CPA or their attorney or their banker or whatever it might be. There are lines in which you have to stay within to do these things, not just to make sure you're making money or using your money to the best of your ability or having your money make money for you, but there's things in the mortgage that you can default on your loan because of that.
Yeah,
People are
absolutely.
assuming this risk. They know that they're doing this and they're assuming this risk. They're thinking, what's the chances that the bank's going to flag this or whatever it might be? But because the market is in the state it's in now, people are trying to get creative and come up with these transactions.
the subject to
Right.
thing seems to be what's in
Taken
vogue
off.
lately. Yeah.
Yeah.
So
I would say it's also important that when you have these types of transactions, yes, you need to consult your CPA, your attorney, your banker, but that all of them need to speak and be on the same page.
Yeah.
Oh, absolutely.
Because there
Oh
are
my gosh,
conversations that come up
That
I can tell you speak to your attorney. Now you're going to play broken telephone, go speak to your
Right.
attorney,
Right,
and then he's
because-
going to give you an answer, and then you're going to come back to me. So being on
Mhm.
the same page is really important.
Yeah.
Yeah, we do.
Mhm.
We do conference calls all the time, especially with some of our commercial clients who are selling and doing 1031s. It'll be me, the accountant, the clients, the qualified intermediary, the Delaware Statutory Trust Company, if they're using a DST, and it's like,
Yeah.
okay, like this is what he wants to do. How can we do it? Type of situation.
For our next podcast, I have the craziest story on a 1031 exchange gone wrong. The
Okay.
worst story you could ever hear.
Oh, we'll do a
Uh-oh.
1031. It's like our specialty, 1031 podcasts and seminars.
That's
I want to hear
This
that
is
one.
So something we-
broken 1031.
Broken
Gone wrong.
1031.
sounds salacious.
we're gonna tease that for the next episode
Yes.
with Jake. 'Cause that's
Absolutely.
A broken
We'll
1031.
lead with that.
Yeah.
That's-
What is
And
what is
somebody
I know what a
walked
broken
away
1031
with no money from this 1031, sold 4 tremendous properties, reinvested it, and found out after he came to me in December that he owes millions of dollars of tax.
I can't wait
All
to
right,
hear
we'll
about that
figure
one.
that one out.
Well,
I don't know if I can wait. I need to hear this after the podcast.
Well,
Right,
after
yeah.
the podcast,
We have
well,
to save something for
yeah,
next
yeah,
time.
Yes.
absolutely.
All right,
So something that we kind of talked about before we jumped on the podcast that I thought was very interesting was owning your primary and
Putting it in an
owning it
LLC.
outright, and then going to your attorney saying, "Hey, I want to put my primary into an LLC." And my
Yeah.
question is, as the attorney, well, why? Well, for liability reasons. Like I want to, protect myself from any liability. And
Yeah.
then my question is always, well, you should talk to your accountant for tax purposes and see, what the implications are. Because
Sure.
obviously, just as the attorney, I know, look, and again, we'll put a little disclaimer, I'm not an accountant, but
Right.
as your primary, you receive an automatic exemption on capital gains as an individual and a married couple, right? Individual 250, married 500.
Mhm.
So the
I
second
thought you said you weren't an accountant.
I'm not.
Oh,
it's a
sorry.
chat
But I-
GPT account.
Yeah.
But I read it in a book.
Yeah,
one
he
time,
Googled it right before he
and
came on.
I retained that
Wow.
information. And I read it in a book, and
Yeah.
it's stuck.
There's a couple rules related to that
There
too.
are a couple rules related to that.
Yeah.
Right, but when
But
you
so what
put it
happens?
into an
What
LLC,
happens if now I'm married, and now we
That's good
take
to
the
know.
marital residence? Well, I am married.
Okay.
But just
Nice to
hypothetically,
know.
let's say I'm married.
I'm married too.
Good.
All right.
Congratulations.
Thank
I
you.
don't know.
How many
Yeah.
years?
Oh shit.
Oh boy.
Oh.
6, 7.
Let's edit that out.
All right.
Edit that April. I'm sorry.
Oh, he's gonna hear about that later.
No, that's like 6. It's like 6 or 7.
It's like 6 or 7.
So they
It's
come to
only
me and they say,
365 days. No one's gonna notice.
no one's gonna know. It's just a blip. It's a blip in life. So, hey, John, I want to transfer my marital residence into an LLC, and me and my wife will be the membership owners, right?
So you're converting non-business property, your primary home, with that exemption into business property where you lose that exemption.
That's right.
I don't see any real reason to do that unless you're really worried about something happening or something did happen.
like you potentially have a
Right.
significant amount of assets, or the home is worth a significant amount of money, and you're trying to protect yourself.
So I'm going to introduce you to my insurance guy
Right.
who's going to tell you do an umbrella,
Right.
right? And
Right.
have massive coverage. if that's what you're worried about.
Mhm.
But why would you throw away a $500,000 exemption or
for no
$250,000?
reason. Yeah.
Right? The other side may be, well, I plan on living here for the next couple of years, and then I'm going to rent it. So let me put it into an LLC now.
Mhm.
That I can see.
So I'm going to lose the exemption anyway down the road,
Right.
right? Because it's not going to be my
Right.
primary home
Exactly.
in 5 years.
But
Exactly.
wouldn't your advice just be wait until you know you're absolutely going to rent out the property to
do it.
It
transfer
would
that
be,
into an
but some
LLC?
people are very
Because-
scared of the liability
Sure.
or have had some issues
I get
or
that.
have pending lawsuits.
Right.
And
But
they
if
say,
what Jackie said is, the case, you wait till that last minute. It's only 2 out of the last 5 years.
that's right.
So
Right.
even if I transfer
Again,
it tomorrow,
more accounting and tax knowledge.
you have to know something. So
Yeah.
even if I transfer it tomorrow into the LLC,
That's correct.
and I rent it out for the next 3 years,
That's correct.
as long as 2 of those 5 were my primary, I'm still good.
Yeah.
So if you really care that much and you do have that plan, I guess there's a way to strategically plan that with your attorney and your accountant
Correct.
on the same call,
Yes.
not separately.
Right.
Yes.
No, altogether. But wow, it's a lot. I want to hear
Yeah.
about this 1031 story after, but I know we need
That
to
could be a
wrap
whole
up
that could be a whole
today.
podcast. That
Because
could-
there are
Yeah.
so many offshoots we can do on these topics, but most importantly, because I know everyone's going to start filing their taxes as soon as January 1st comes around. No one ever waits until the last minute to do it.
Yep.
If
I don't
you've
wait.
invested in real estate this year or you plan to invest next year, start having these conversations with your accountant. And if you can't have these conversations with your accountant, then I think it's time to
So call Jake.
reach out.
Call Jake.
Call
Right.
Jake.
Don't do TurboTax.
Right. Cancel your TurboTax subscription in anticipation
Yeah.
of next year. And this is such an easy thing to get smarter about how you
Right,
use
what's
your
it gonna
money and how
cost?
you invest
I
your
mean,
money.
what's it going to cost you? $500, $1,000 maybe to have your tax returns done
These
by
are not-
somebody?
I get that question all the time. What is it
Right.
going to cost to do the returns?
Right.
My answer is always the same: as much as possible.
Yeah.
Right.
But again,
It
and I
seems to
always
break the ice with the clients because I'm
No,
like,
but I mean, listen.
well, what do you
obviously, if
think
you
it'll
start
be?
having, you have complicated tax returns and multiple LLCs.
there's
obviously,
no-
it's going to be a lot more expensive.
that's like anyone's business.
But-
I can't determine what
Right.
my legal fees going to be on a
Right.
commercial deal because every deal is different. Residential, yeah, sure.
Yeah.
But like again, we have this conversation all the time. The industries we are in and what we do, we provide a service. I'm never one to try to lower someone's fee if they're providing.
No,
a
I don't
service.
question it.
I don't
Right,
question
yeah.
it. If you do a good job, I'm gonna be so happy with your service that whatever I paid you is not even going to matter.
they have
Right.
to do
If
a
you-
great job.
Yeah, right,
Not
right,
a good job.
No, they have to do a great. We all have to do a great job. And if we don't do a great job, or someone who's providing me a service doesn't do a great job, then that's when we'll be like, all right, well, that wasn't worth the money that I paid this guy, and then I'll
Yeah.
go to the next person who I believe may provide me with that great service.
Right.
But I'm
Absolutely.
never gonna call Jake and say, "What's it?" Oh, look, I'm calling people, and you're the third accountant I got, and what is it going to
Yeah,
cost me
what's
to
it
file
gonna
my
cost me?
2024?
But you know
tax
nothing about
returns?
my return. What's your fee going to
Right,
be?
right, right.
Right,
Don't
yes.
worry, I make X, and I don't really have a lot of write-offs. Like
That's what everybody
I'm
says.
a vanilla.
probably.
I'm a vanilla
Very
client.
simple return.
Very
Yeah,
simple
I've heard
return.
Yeah,
that.
yeah.
And
So
we-
simple.
we-
I did on TurboTax the last few
Yeah,
years.
yeah.
We have a huge real estate tax practice, and knowing the ins and the outs and educating our clients is the most valuable thing that I can do. Right?
Mhm.
That client that I gave you the example, the Sam,
Yeah.
Yes.
right? He's going to save thousands and thousands per year.
Yeah.
But what we also did was we taught him about the cost segregation studies
Mhm.
and how we can use that because he is a real estate professional.
Mhm.
And because he's a real estate pro, he can offset his gains and losses and use the depreciation. We'll save that for next time too.
Yeah, that'd
Yes.
be-
Yeah. That's a
Exactly.
good one too, for
Yeah.
sure.
So invest in the people who can make you money.
Right.
I mean,
That's
that's
it.
you have to look at it like
Absolutely.
that. At the end of the day,
Do what you
You're-
do best.
Yeah, you have a
Right.
great CPA. He's making you money by
Right.
giving you this advice.
he's saving
That-
you
He's
money.
saving you money.
No,
Same thing.
saving.
Same thing.
Right, but
There
he's
you go.
Yeah,
right.
same
I
thing.
would argue say he's
It's
making
making-
you money.
Making you money just sounds better.
That's right. I know, but then you negate it. I sit out there.
Well, because then I thought about it for a second. I'm like, oh, okay,
Yeah.
making money sounds
But
All
better.
right.
exactly, it's well worth the
Yeah,
investment
it's worth it
into
for sure.
the right
Absolutely.
service provider. That's
Yep.
That's it.
Thank
All
you,
right.
sir.
Thanks
Nice
so
time.
much, Jake. Really appreciate it.
Great
Great
questions.
info.
Love being here.
Yeah.
Eye opening.
Thank you.
Sure.
All right, till next time.
Till next time.
Later, folks.